All right, everyone, welcome back for the episode of This Weekend Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So starting off here, as always with the SPX, you're going to see we had another rally. So again, CPI came in colder than expected on Tuesday. It wasn't by much, let's be honest. It was only by about 0.1, but that was enough to get the markets going, right? So we talked about end of year flows, seasonality. It doesn't take much here. We had the Fed the previous week, or I should say the previous 2 weeks, and again, it doesn't take much to get these markets going when you have a lot of shorts in them. And in any case, we had that big pop on Tuesday, so Monday just kind of a muted day, inside day reaction, waiting for the CPI. And then we had a huge gap and go on Tuesday. So again, we talked about markets being a little due for a pullback last week, and now they are really due for a pullback. But that does not mean they can't inch a little bit higher, right? So I'm not the only one who's looking for a pullback, and sometimes when it's kind of obvious, the markets have a way of kind of surprising everyone. We're at a point right now where even the bulls are a little surprised at this move. But we have had 3 days of consolidation here after the move on CPI. And, the next level to look at would be 45.50. So that's kind of your next big level. There's also a trend line going back to the all-time high. So we can draw that in right there. And you're going to see that's going to coincide, if we can just put that exact, there we go. You're going to see that's going to coincide with this 45.50 area. So that could be a magnet for the market. There's also a minor pivot high right there as well, around 45.40. And then you've got the gap window there at 45.50, and of course the gap fill just above that, so a few points ahead. But you're seeing this convergence here, big picture, you're seeing this convergence here of levels. So if we do continue higher, I would expect that to be pretty major resistance, especially if we don't pull back at all. Right, this market is due for a pullback. I've been talking about this all week. Everybody was talking about how oversold we were down here. And you can take here, just draw a line to the 20 moving average and copy that. And you're going to see that even now, we're still completely stretched from that. And we're not even, the candle is completely outside of this stretch here. If we look at, earlier this week, look at how far outside we were. So, everybody was complaining how oversold we were back then, and look how far overbought. Typically, it works the other way around too. Markets get stretched further to the downside than the upside, but that just shows you the power of this rally. But in any case, we're basically stalling out here at this 4500, 4510 area right now. It is OPEX week. So options expiring for November. And again, after the big surge on Tuesday, we've kind of just gone sideways. But that's really the next big level here that I'm looking for. Now, going into the end of the year, there's going to be lots of positive flow. I talked about this on Tuesday. There will be FOMO. There's fund managers that have missed their benchmarks all year, and they're going to be forced to pile in. Now, that may be already happening. If we continue up into this level, there might not be enough left for a full-on Santa rally, because you have to understand the gains can get pulled forward pretty quickly. That does not mean I'm saying we're going to go down very sharply or crash or anything like that. But a lot of these gains are getting pulled forward. I mean, we're up 10% since the 27th. The NASDAQ is up 12%. It's, the triple Qs here are up 12%, completely erased the, 2.5, 3 months of selling. We talked about NVIDIA last week adding an AMD to its market cap. It's now added an AMD and an Intel to its market cap, right? So markets are, we're seeing this FOMO, we're seeing panic buying, essentially. So just keep that in mind. I think the healthy, quote unquote, healthy move is a pullback to 4,400, maybe 4,350. And then, you get kind of a move higher into the year end. That's certainly a possibility. I'm not so sure that's going to happen though, but this will be major resistance here around that 45.50 area, especially if we get up there early next week. Now, the one other thing that's a positive for the bulls is next week is a holiday shortened week, right? It's Thanksgiving. The fund managers, the big boys, are going to be gone by Tuesday, most likely. We do have, speaking of NVIDIA, we do have an NVIDIA earnings, so that is a little bit of a wild card. Obviously a big tech player, and does move the market. It is also a good gauge for risk. So, and the stock, by the way, is priced to perfection too. So, I'm sure they're going to have a great quarter. But is a lot of that priced in? I mean, like I said, they literally just added an Intel and an AMD to their market cap over the last 3 weeks. So maybe it's already priced in. Something to keep an eye on, but that is a general positive though for the bulls when you have light volume and the big boys kind of away, unless we get geopolitical tensions or something like that. You want to give the market the upside bias. One last thing as well, and this is something that could favor a pullback, is I believe on Tuesday we've got 10s and 20s being auctioned off. Now, those will not come out of reverse repo. We've had T-bills getting auctioned off the last 2 weeks. The market has not been bothered because they can take that out of reverse repo. And reverse repo has actually been draining pretty quickly, with that treasury cash balance. But in any case, that could be something that ignites a pullback, ignites a catalyst for a corrective move. The correction starts with a pierce of this low. You take that out on a closing basis. There's a lot of air pockets here, big air pocket there, and really on the way down as well. I'm not so sure we go that far down. But as I said, the market is overbought here, and definitely do not be chasing this. I would certainly not advise that. In any case, triple Q's here flirting with this double top. We never took it out. So there's Wednesday, 387.75 was the high, and the high here is 387.98. So we are consolidating to do that. If we do inch up, we could take out that high very easily. It's not like it's that far away. And I would just proxy the Q's against the spiders. So I'm just going to use 45.50 for the next level on the triple Qs. I mean, 390, that's a whole round number. That could be a bit of an area. There's a pivot right here at 390 spot 20. So maybe that's a level there. It could coincide with 45.50 on the SPX, but the triple Qs having a monster move, just like everything else. Diamond here. So again, big move, big gap and go on the CPI, but then kind of coming into some pivots, right? 1, 2. And then that was your breakdown. If you take a look on the weekly, this was your breakdown counter. You had a bull flag, right? And then it started to break down with this big red bar. You retraced and then you sold, retraced again and you sold. We're now testing that. So just be aware of that. Dow a little overbought here. Another thing too, typically when you get a 1, 2, 3 like that on any time frame, the Dow and the Qs, you're going to get a pullback the next week. So again, doesn't mean that it has to happen. It's just generally how it works. But in any case, there's the Dow, and it's into those pivots there, and we'll leave it at that for now. Correction starts with a break of this low there. IWM, so that has been all over the map. I mean, we talked about these gaps here, 1, 2, and then it faded the entire move last week. And then look at this fat gap on CPI. Went up into this level. I called this out earlier in the week on my channel, said right into this 200 and 100 moving average, coinciding with these pivots and this breakdown area. That's where it wants to go. It went up there, kissed it perfectly, and pulled back. And then where did it pull back to? The blue trend line that we've been following for a while. But lots of gaps here on a lot of charts. But IWM getting a bounce here. And again, we'll leave it at that there. But yeah, just a crazy week for volatility. And you're seeing, you're going to hear the narrative too. The rally's broadening out, right? So people going to small caps, you're seeing short covering into small caps, and people are looking for other sectors that haven't run yet. So anyways, semiconductors here for the SMH, that made a new all-time high, new all-time closing high. The SOX is a little bit different. I've been using this one a little bit more lately just because the SMH is so heavily weighted towards NVIDIA. But in any case, the SOX here is up 65 basis points, and it's above these pivots. There is some resistance right there, also with that red bar. So that is daily chart resistance as well. Again, very overbought here, 1, 2, 3 up. May get up to the 3,800 handle, but again, overbought here in the short term. But semis are acting well right now. IGV. So again, we got through that pivot there as well. We talked about that last week. I think I said 367 and then to the double top. We're above the double top. So nice move for that. Next level, there's some pivots here at 380. The next big area is 395 on IGV. I don't know if it goes straight there. Again, a lot of things are overbought, but those are just the levels that I've got worked out right now. But cloud acting well, despite having some pretty poor earnings. Cisco and Palo Alto taking hits on both their respective earnings. So, but in any case, IGV okay. Transports here. That got to my level. So again, there you go. We got to the 200. I said it might need to pull back through the 200 or to push up, and it didn't. And so what happened is it got rejected, right? So when you go up into a moving average like that and you try to rip through it, and then you go into a major resistance level, it's not going to go through it on the first try. So this needs to consolidate, do some backing and filling. But it got right to my level. I've had this drawn on here for weeks now, actually months, because this was the original breakdown level. I said if we break through this, we're going lower. And that line's been there. And that's where we went on Wednesday. We pulled back. So again, if this consolidates, it can go higher. But for right now, it needs to do some backing and filling. All right, let's talk about interest rates here. So rates did pull back in, and that is the catalyst for this market rallying. So now this is the 2-year here. You see that big sell on Tuesday, but it's holding this area. And you can make a case you got a bearish inside bar there on the daily. I think the 2-year wants to go test 4.6. So that's kind of where I'm looking for it to go. You got the 200-day, this area, pivot, and we'll watch for that pattern there. If it starts to break back up and you get above, 4.8 and 5%, well, then it's going to go a lot higher. That's what the pattern suggests. But right now, I think it's set up for a move lower. It might need to do some more consolidation to get there. But that is sort of the pattern there. The 5-year making a slight lower low. Big level for that is around 4.2. And then, like we'll just say 4.1. Okay. So right down in that area. But 5-year also backing off. 10-year is almost home. So 10-year is almost home, right? 4.3, 4.35. It almost got there Friday today, and you got that 100 moving average. So that will be support. So I don't see a lot of short-term downside for the 10-year. Again, this could go more towards the pullback camp for the spiders, right? So if, let's say Monday we're down into this area and we start bouncing, it's likely the markets are going to pull back, right? Same thing with the 30-year. Here's kind of your downside, right? 4.4, 4.45, 100 MA, previous pivot high, previous pivot. You get down there, we're probably going to bounce, and I don't think the markets would like that, right? So that's generally kind of how it is. Inverse, it's been an inverse relationship. And remember, Tuesday, 10s and 20s will be auctioned off. So that could be market moving. It likely will be. XHB here having a great week as well. So again, the expectation is that the Fed is going to cut rates sooner. That's going to help home builders out, right? It's very interest rate sensitive sector. Look at the move here. Nice pattern there on the daily, and nice pop, gap and go. Got above all these resistance levels. It is into resistance now though, and right now it's going sideways, so no real problems. But if it takes this pivot out, it's going to need to back check to 77.50 to $78. But XHB, nice bid there, so home builders acting well. VNQ also acting much better. I like the higher highs finally. But it is stalling out at that 100 MA. It may need to consolidate. If it does that, I can go to 81.50. XLF, that got through my level. So I said 34.50, but big, powerful move. Now it's into some good weekly resistance though. So again, this was you had a bull flag here on the weekly. It broke down. We retraced, and now we're into that. So just be aware. Again, I'm not taking anything away from the move. Big pop for the XLF, and banks are in better shape now, at least on the charts. KRE still has some resistance here with this 200 moving average, but the chart is in much better technical shape than before. Same thing with the KBE, and broker dealers, believe it or not, triggered an inverse head and shoulders to an all-time high if that plays out to pattern. Right now, I've been talking about 490, right? We went there. It's pulling back. If it consolidates, it'll go to 500, and then if it gets through 510, you can go and try and fill this double top measured move target. Again, that does not mean that banks are going to be in good shape next year or anything. It's just what the charts are suggesting here in the near term. Crude here. So the old spike the low and then, rip it back higher pretty much. So we broke through this pivot, and they knocked it back up. So we'll see. Short term, we'll say 79.50 to 80 bucks. We'll say 78 to 80 bucks in the short term. I want to see how it reacts there. I still think this wants to go down and test 68, 69, 70. I do like that area. There's a ton of support down there. I would really like crude to get down to that area for a trade. But right now, it's getting a nice bounce. They spiked that low and then brought it right back up today. So we'll leave it at that for now. But 78 to 80 bucks is, I want to see how it reacts there. But nice little recovery there for crude. XLE also recovering as well, up 2.5% on Friday. So I told you guys the 82 level was going to be support. I no longer liked it. I was very vocal about that on Thursday because we got close to it and then tested it again. First hit is best hit, right? But it's bouncing nonetheless. So it doesn't mean that it can't bounce there. It just means the probabilities are lower. But XLE here, nice pop, and it's back above the 200. I'm still not touching it right now. I just want it. I would prefer to get this a little bit cheaper. And I don't like the pattern, but nice bounce there for XLE. XOP, same thing, holding the 200 moving average. If it gets through that, it's going to 130. OIH into the 200 moving average. And this one I like the best out of the three. I like this weekly falling wedge type look here, and I like the monthly even better. So as long as it stays inside of this green here and holds up, this is just consolidating beneath that 100 MA on the monthly. If you get through that, I don't see any reason why it's not going to 450 and 500. So I like oil services. It's a monthly chart pattern. It might take time to play out. It might not play out till quarter 1, 2 next year, but that pattern's pretty good. Speaking of good, CCJ here. I told you guys 45 last week. High of the day, 44.90. What can you say? So there's your pivot high. And that's, I would say that that's all it's got right now. But every time I think it's going to pull back, it doesn't. So there's a lot of people chasing this, though, by the way. There's a reason why I'm saying don't chase it, because there's a lot of fund managers trying to chase this, and they're dressing it up into end of year as well. Again, panic buying. I just talked about that. They're panic buying this right now. Again, if you own it, trail your stop. Nothing wrong with that. If you don't own it, please don't chase it. URNM is in much more less overbought shape, I should say. And again, it's starting to curl back up. Nothing wrong with this pattern either. I would have preferred a little bit more. I would have preferred that 20 moving average to catch up a little bit more to price. But it's acting well. If you can close about 49.53 on a weekly, and we'll give it the upside bias to the double top there. Quickly look at some ag. DBA still pulling back off the highs. I still like that pattern a lot. And DBC still doing some backing and filling as well. Slight lower low there, but as long as it's above 23.50, I think this is good and holding up just fine. The potash names I'm a little less enthused with. So I think MOS, they held that double bottom there. If that starts to break down, though, 25 is the next big level I have for that. And that's, MOS is kind of a proxy that I use for pretty much all of them. So just kind of use that as a benchmark. So 24, 25 on MOS. But it is holding the double bottom for now. So we'll give it the benefit of the doubt going into the end of the year. Nat gas pulling back here. So continuing to be a bit of a heartbreaker. So right into this level here, pivot low. I think this wants just a little bit lower here. And I'm going to flip over to the adjusted chart that I've been kind of following a little bit more. I don't like the futures as much when there's so much contango. We're right into this breakout area, and there's a lot of support right here. 100-day moving average as well. I still really like the weekly pattern. You got a nice weekly inside bar. So that does suggest continuation at some point as long as you stay above this low on a weekly close. But Nat Gas doing some more backing and filling here this week. Dollar index. So this one had a major breakdown on Tuesday with CPI. Very unusual to see a currency move 1.5% in one day, but that's what happened. And you're going to see here a big outside move down. The daily bearish inside bar played out. There is a lot of support at 103.50 in the short term, and even more at 103. So again, kind of like what I just said about the 10-year and the 30-year, these levels are not that far away, and they kind of coincide with this level on the DXY. If we get a bounce there on those, I would think that's probably going to pull the markets back. This is not far away resistance. It's about equidistant that the dollar is, right, from those levels, and yields to the levels I just showed you. So it's all kind of lining up, as you can see. So dollar index, though, 103.50 is your next big level, and I want to see the reaction there. Gold continuing to bid up here, but not as much as you might think with the dollar taking such a hit. I think it's just because money moving into risk assets as opposed to, like gold's a little less sexy. Market's kind of in euphoria mode, trying to just panic bid tech. So there's kind of a double-edged sword. Yes, the dollar's down, which helps gold, but it's down and money's looking to get risk, right? So Gold, not as much of a beneficiary. Silver did have a nice week, though. A lot of resistance at 24, but big, nice outside move. And it is closing the week below that pivot. But it is holding up right now, and we'll see what kind of pattern it puts in. Again, if it retraces and flags, it's nothing to say it doesn't go to 25. Platinum hit our level, so we got all the way down there. This is getting very interesting. I like platinum down here. I'm just waiting on pattern or a retrace to enter personally. So I like it at this area. Nice bounce off that 840, 845 area, and I think platinum is pretty much a buy down here. I just want to wait on a pattern or some type of retrace. Same thing with palladium. These are thin metals, meaning that they don't trade a lot of volume. They can overshoot. But I think palladium is fine if you want to accumulate it for a long-term position. I want to be clear on that. Especially if you could close the month. I mean, this would be a sexy monthly candle. If you could close the month at like 11.10 or even just flat for the month, like 11.30, that would be a very attractive looking candle on the monthly. And we have about a week and a half left to the month here. Look at that level, 200-month moving average, previous all-time high. That's kind of where you want to accumulate, and I've been very vocal about that for the last probably 5 months. So in any case, that's the level there on palladium, and it is getting a reaction. Anyways, copper here, it's back above the trend line here on the weekly, and that's okay. It's good, but really the big level to me is 376 on a weekly close. If you close above that, then I think copper can go, maybe certainly up to this trend line at least. So we'll say that 386. That's really all I've got penciled in for it, though. Even if it does do that, but it's getting a bounce here, and I still think copper wants to have one more leg down, but we'll see what we get here. It's holding up for now. Bitcoin all over the map here. So it's currently sitting at 36,000. Look at this whipsaw here. Down, up, down, up. I think they're trying to whip people out ahead of the ETF news. That's just my take on it. I still think there's a lot of resistance up ahead. And on the monthly, this is still, I don't show Bollinger Bands on here a lot, but that top BB is pointing down. And every time we get up to 38,000, it's rejected. So just be aware of that. Now for bulls, if you just hold up here into the end of the month, that might be enough to get that to open up. We'd have to see where it closes by the end of the month. But just a little tidbit there. My kind of thesis is that they're going to release the ETF news. It's going to rip, and then they're going to sell into it. So it's going to be a sell the news. That's just my kind of take. Everybody's wondering when the pullback is going to happen. I think that's how it's going to play out. Again, it's just my opinion. There's nothing really saying that has to happen. That's just kind of how I would guess that this plays out. But right now, it's holding up and it's trying to consolidate. So nothing really wrong with it. All right, lastly, again, just to reiterate, again, $103.50, watch that level, 10-year, 4.35. We get into those levels, and especially at the same time, market getting up to 45.50, I think that's definitely high percentage for some type of a retrace if we don't get one without that happening. So this would be kind of my max move here for the markets here in the near term. I mean, this is a sprint here into a lot of resistance. So at some point you're going to get some buyer exhaustion. But again, markets are holding up, and I'd say into the end of the year, give the market the upside bias unless we get some major geopolitical news that comes out. But that said, we are very stretched, very overbought, and markets do need to compress and do some consolidation and backing and filling. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on ConoverTrades.com. I will talk to you guys all next week.